From your mouth to God's ears. I would, of course, I'm jaded, right?
Welcome to another episode. Today we're going to talk about scale in mining and how the future may be different if we get it right. I'm Paula Rojas and I got my co-host Lucho Sáenz. Hello, Lucho.
Hey, Paula, how are you?
I'm good. And you're going to introduce the perfect guest that we have today.
Yes. Hi, everyone, and hi, Jay. Jay
Hello.
Chmelauskas, our guest today, and I met Jay when I was with Standard Bank many years ago. He was with Jinshan Goldmines, which was basically China Gold. It was one of the Ivanhoe portfolio companies, and Jay was looking for gold and looking and finding gold in China. Then again, we crossed paths in Western Lithium Americas when I was involved in the lithium business, and more recently, for now, he's with Camino, which has a series of projects here in Peru and Chile that we're going to talk about. And it's an interesting time. It's an interesting time for copper. Jay's in Toronto right now, about to get together with another 25,000 people in Coal Toronto at PDAC. Big arena for juniors particularly. But Jay brings a different story, one that I like quite a bit, and that we thought it was good to bring it on for a podcast. So, hi Jay, welcome.
Thanks very much, Lucho. Nice to see you again over the Zoom here. And yeah, I mean it's really a business plan that we're bringing versus a story, and it's revolving around copper.
All right. So the main topics that we're going to be covering today are we're going to start off with some demand catalysts and trends, prices, required investments. So kind of a general setup for copper. And we're going to talk about ways to address this looming demand that we all know is coming. And we're going to be discussing as well with the big versus small perspective. Then we're going to go into some scales, examples in small scale production, and we're going to be talking about the Camino example, and then we're going to close with what we see ahead in terms of scale, whether this is going to change the landscape or not. And so you want to stay until the end for that. All right, so with that all set, we can get started. So let's get started into the demand and the sort of EV perspective.
Yeah. Okay. So just macro level here. I mean, there's two drivers for the copper industry right now. One is the demand story, which we hear a lot about in terms of electrification of our global economy. And then number two is the supply side, which is depleting mines, mines that have been operating for 50 years, grades dropping, and ultimately a supply shortfall as we move forward in our industry, and the timeline, to build on new projects. On the demand side, I do see a demand continuing to increase regardless of what you see and read in the global economy. That demand is driven by electrification of transportation. I saw this when I was living in Beijing almost 20 years ago with the air pollution that we saw there. And that kind of drove me into the electrified car industry and getting behind the lithium space when I was the CEO of a lithium company. Fast forward to today, China was developing an automotive industry 20 years ago, a nascent industry, and they wanted to be one of the biggest and best in the world. Today, they're producing the most cars in the world. They're producing over 30 million cars a year now, and last year, 50% of those cars are now electric. So in terms of tipping points, we've far passed the tipping point for electrification in China. And in fact, China's producing so many cars now that they're exporting to the rest of the world. They're one of the largest exporters now of automobiles behind Japan. And to give you perspective, the U.S. is producing about half of those numbers now in terms of cars out of the U.S. We're starting to see some of these cars show up in our jurisdictions, in Lima and in Chile. And just recently, we've been looking at buying new pickup trucks in our jurisdictions, and the Chinese trucks are much more affordable. Now these are combustion engine cars that we're seeing on the roads now, and I think China now makes up about 6% of the market down in South America, up from almost nothing a few years ago. And the projection is just over the next few few years to be almost 15%, of those markets. So one question I have is, as we see electrification certainly proliferate in Europe, now in Asia. The U.S. has about 8% market share and growing. What do we think is going to happen down in South America? And Lucho, I mean, you're in Lima now. What do you think about electrification? I know there's electric buses down there now.
You've got the electric buses that are starting to come into the municipalities. Yeah, what I remember when I was in China a few years ago. I mean, the move, and in Asia in general, in South Korea as well. I mean, so it was very big, a centralized move towards that electrification. Here, you don't have that, but it's going to start coming, right? I mean, I was in a mine just south of Lima in Condestable, which is an operating copper mine, and they've already got trucks, underground trucks for their underground operations for haulage that are electric, and they're using more. And obviously, they're coming from China. I didn't know the number of 6%, right? But I mean, considering the growth that you have and the replacement of vehicles here, right? I mean. First of all, gas is expensive here. I mean, gasoline is expensive. So you're going to see that move. I think it's going to depend a lot on the infrastructure for the charging, of course. And you're seeing, it started with the hybrids, but more of the high-end ones, the Audis, the Volvos. But right now you're seeing a lot of the penetration of the Chinese vehicles, which before were all gasoline. And now there's a lot of electric Chinese SUVs coming in for transport, let's say from the airport and stuff like that. You're seeing it, because it's not government pushed, you're not seeing it the way it really should, but it's coming for sure. I mean, in terms of Peru and Ecuador and stuff like that. I have no qualms around the demand, to be honest, Jay. The copper has come into the picture later in the game as part of that trend. That's the novelty, and I don't think people are fully bought into that. They need to factor that into the demand and supply.
Yeah, Lucio, I mean, you talk about the economics of electrification. We're seeing BYD. You mentioned that the SUVs are starting to show up on the streets in Lima. I mean, they're cheaper to operate. They're cheaper to, from a gasoline perspective, cheaper to maintain. I mean, we're seeing this worldwide, and we're also seeing the experience that once people go electric, they don't want to go back, to combustion engine. But one car that's out now that BYD has started to produce in 2023 is the Seagull. This car is the price point's about $12,000 US. I mean, it is really changing the game. And when you look at the car and analyze it, I mean, it's got one wiper blade, on the front. I mean, the welds are done in such a way that the body parts come together, in a manufacturing system that is very streamlined. So they've really reduced the cost of manufacturing. In fact, if you listen to Jim Farley, who's the CEO of Ford, he will say the same things, that the customer experience with electrification in the U.S., even though it's only 8% of the market right now, or it's as much as 8% of the market right now, is very strong. Their customers like the electrification, they like the performance, and what Ford is now doing is they're learning, they're studying Tesla, they're studying the Chinese manufacturing methods so that they can compete and they can produce a profitable electric car. And Jim Farley from Ford believes that the future is electric, and that they will be producing an electric car with improved battery technology. And their plan is to start doing that over the next 2 years. Now, their portfolio is not 100% electric. It's plug-in hybrid, it's range extenders, all the rest. But it's still around that electrification, electric drive, electric motors that need copper, electric batteries that are using copper if they're lithium. So BYD's got this new car. It is really a game changer. It's disruptive to the automotive industry, and I think the cars like that will be driven, and the driver behind buying them will be economics in places like Lima, and where economics really do drive customers' purchase choices.
I was at a conference a couple of weeks ago where the EV Council of Australia gave some figures about adoption. And so in Australia, we're a little bit better than in Latin America. We're about 10%, nearly 10% penetration. It's still way down if you look at some of the other countries. Like the average globally is 20%. So that's a big clue. And then Norway is at 90%.
Yeah. And you can't talk about these adoption rates without looking at government incentives, right? So Norway certainly has incentives. China has or had incentives. They had a plan back in 2010 to look at electric battery or lithium-ion batteries, fuel cells, and electric drive propulsion systems. And 15 years later, they're now producing the most electric cars in the world, and they build the best cars in the world. And the government, through incentives or what have you, invested over $120 billion, into that industry. But as I said, they've now passed the tipping point where these cars now compete with combustion engine cars. So there's only one way to go when the driving experience is better and the car to buy is the same price as a combustion engine and the energy source is cheaper. It's electrification. That's the future. Or that's here today. It's not even the future.
Yeah. I think it was the future maybe a decade ago. I think now we're seeing enough adoption that is, as you say, like it's on the streets. Like you see a lot more EVs on the roads. Like in Chinese, I still get surprised, but yeah, I see them here on the roads. And like, of course, we're closer. It shouldn't be too surprising. But in general, Australians haven't been too keen on Chinese EVs, but it's changing. You see more on the streets. So,
And it's notable too that British Columbia is about 20%, Quebec's about 20%. Both of those provinces produce, up to 80, 90, 99% in Quebec with renewable energy, primarily hydro. So that's the combination.
So Jay, tell us what is your prediction on copper price? Just over the next 2 to 4 years.
Well, look, I go back to these copper cycles that we've been in. And so I go back to the China cycle from 1999, and I'm from Vancouver, and so Highland Valley Copper was hanging on for dear life. It was on care and maintenance at 60 cents a pound. And if you told Tech at the time that copper was going to be $1.50 in the near term, they wouldn't have put it on care and maintenance. So over the China cycle, which was 2003 to 2011, copper went from about 60 cents to $4.50. That was a 7 times increase, in the copper price. Fast forward to 2008 and then 2020, with the lithium space. And I remember, Lucho, you and I would talk about whether the price of lithium should be $5,000 or $6,000 a ton, and then it went to 60. It went 10x, and it's come off now back down to 10 to 14 or so, but it's still double where we were when we got our businesses off the ground. So where is copper today? Pick a starting point. Is it the low $3 or is it where it is now, $4.25? I think copper can go 2x. I think it can go 3x without anyone blinking. And it's like housing prices in Vancouver. They hit a high price, and then they go flat. They stay there, and then they hit a new price, and they go flat. Copper seems to, if you look at the copper cycle, it does seem to do that. It hits new highs, and then it can stay there, especially in a cycle. So I think I believe that we're trying to buy as much as we can in this $4 copper market. Because we think that Goldman Sachs incentive pricing of $5.20 is very reasonable, and we think 6, 7, 8 is also very possible and in our sights within the timeline of building our business here.
From your mouth to God's ears, I would, of course, I'm jaded, right? I'm a director of a copper company. I would, small copper company, but whatever copper production is good at $6 copper. So I would love to see that. So let's definitely go with that. If you're going to spend $200 million on that project, that's one thing. If you're going to spend $2.5 billion on that project, the scale is different. You can afford to go into $200 million and ride it. If you trust that the market's going to be there for you, and you trust on not even higher prices, but current prices. But, a $2.5 billion bet is just a different kind of state of mind, right? It's much longer term, and the players are different, and the financing is different. So there's a lot of consideration, which again brings me back to there needs to be more. I'd love to see more stories like the ones that you're heading, Jay. So,
and it can take much longer with these larger scale projects.
Of course.
And it may never happen.
In every sense of the word. Communities, permits, just everything is going to take longer. And we see it. I've talked to Paula so many times. There's a great list that the Peruvian Ministry of Mines puts out of
Yeah, we've
the
seen
future
that. We've
development
seen that.
Peru. I'm not even sure Los Chapitos is there, right? But I'm sure that Los Chapitos is going to make it, into production much before a number of the projects that have been there for a decade already. But I'll leave that for another podcast.
Yeah, it is there. It's on one of their lists of the next in line, projects to be built.
It's certainly one that I talk about when I talk to
Yeah.
the people that are coming to visit.
Let's go a little bit more into why this gap, like why is this needed? Like we've seen an S&P analysis that, in the last couple of decades, we've gone from 12 years from discovery to production between 16 and 17. So that is showing a shift in the wrong direction, and that's kind of making it harder for to see the future supply coming online, right? So we're feeling less sure about that supply coming on.
Yeah, I mean, I guess one of the questions is, does small scale mines or medium scale mines move the dial for the copper industry? And one thing I can say is, at a conference here in Toronto this week, we are getting groups that are end users, which are manufacturers, technology companies. This is, the final end users that are coming directly to the producers now, or developers in our case, looking for supply. And so I think we need to, I think Rio Tinto, BHP, Anglo American, they need to fix the macro market situation in terms of bringing on large new supplies. Well, as I said, we're more of an entrepreneurial management company. We see tremendous opportunity in price increases because of this lack of supply in the near term, to partner with our mining partners, but also end users. The end users are looking for copper supply, and they're now coming downstream to or upstream, I guess, to developers like ourselves. So while we might not move the dial in terms of the overall copper demand, we are very important to these Korean and Japanese and potentially Chinese that have approached us in terms of where our copper supply is going to go to. It's important for them so that they can continue to build their electronics.
Yeah.
And I think one of the issues, Paula, is that it's very difficult to quantify how much contribution these small scale producers can make, right? I mean, the area that I was referring to, where Jay's sort of area of influence in Peru is the Nazca area, right? In that area, there's, I don't know, 15, 20 operating plants. I mean, there's a limited amount of permits because it's in a protected area, but I think there's maybe 20 operating plants at 350 tons per day. Now, I mean, 7,000 tons per day is not a huge mine. I mean, definitely. I mean, it's not a huge operation, definitely not. But we've got to remember that these are operating at 7,000 tons per day of 2% copper, right? It's not 0.4% copper. So yeah, it's certainly the size, a mid-sized mine that's going to be going on. Are there strategic players attached to this? No. I mean, that's essentially being financed out of working capital from these small operations and by the trading companies, such as, the Trafiguras, IXMs, Glencores, and the smaller trading companies who benefit hugely from this kind of production. But it adds up, right? Because that's just one region in Peru, and it's all over Peru. And you have it in Chile. I mean, you have it everywhere you have high grade. And of course, the price scenario with copper where it is, makes the supply side of this ore, there's no end to it. There's tons of supply.
Yeah.
It's just a matter of where you're going to take that.
Yeah, in terms of moving the dial for the large for the market as a whole, I mean, the majors do need to look for scale, and so by doing that, they're going to larger projects. Many of these are now in lower grade, which means the economics are not as good, and their hurdle rates are much lower. Less than 20%. Let's say 15 to 20%. I think there was a Goldman Sachs put an incentive price out of $10,500 per ton of copper this year, which is about $5.20 per pound. And that incentive price is to have an IRR of greater than 10%, for some of these major mines. So the large mining companies need to focus on these large projects that fill, the gap and turn the dial in terms of their production. And this creates an opportunity for smaller companies like ourselves to be profitable, to build scale through multiple mines, and fill that that step gap as these larger mines come on board. Of course, there's exceptions out there, like Kamoa-Kakula is one of the incredible mines that Robert Friedland built in the DRC. But it's taken 27 years for him to get to that point of production. He says he's an overnight success. It only took 27 years.
I think there's an opportunity to kind of revolutionize the sector, not because you want to be disruptive, but because I think they're talking about this. I think there's a problem with the business model of an exploration company. Like I think it's about 70% of the mining companies listed in the four main exchanges. So ASX, TSX, TSXV, and CSE don't have any revenue. Like, how can all of these companies survive if there's not a more productive, for lack of a better word, productive way of operating? And if we take the case of smaller scale, maybe in the intermediate to a little bit large, but still the perspective here in Australia, for instance, is the juniors try to get to production. Of course, we're talking mostly about gold because Australia is mostly about gold, but it's easier, it's more valuable and all of those things. But still, they managed to go from exploration to production in a shorter time frame. The mine lives are shorter, much shorter, but it's a business. It's it's creating value not just in the kind of adrenaline inducing. I have a 10 bag or a 20 bag, or like as an investor, as a punter, if you want to call it that. But how can we have more of these stories that have an actual business model that generates cash flow on the other end? I think that's really...
So, Jay, I wanted to touch a little bit on that because Paola and I have talked a number of times about what the bigger mining companies are looking for in terms of copper and the mergers and the large projects and stuff like that. And on the other extreme, small scale mining, almost artisanal mining, of which you're fairly familiar because down in Peru, here in Peru, there's a big district of these small processing facilities, 350 tons per day, but that amount to something, right? But are a very different type of operation, obviously. There's a big gap, as you mentioned, of the not even medium size, because the medium sized producers have grown in scale. The hut bays, the capstones, etc. Camino's entering an area that is a bit unknown in this market, right? And it's a different path than the typical junior mining company, right? In Peru, we've seen these, right? Fortuna Mining started with a small polymetallic mine here in Peru, which they bought off Hochschild, and has become, a multi-billion-dollar, mining company with several jurisdictions on the precious metal side. Its sister company, Atico, which I'm a director of, has an operating copper mine in Colombia and a project in Ecuador. But the copper mine in Colombia is not big enough to really tip the scale, right? Puquios is a bit there. Jay?
Yeah, so we're in a position, we're a micro cap copper company, and we see that the tremendous opportunity to create value in our industry is to start mining and getting metals out of the ground, copper out of the ground. We think that the investment climate has changed here such that mining companies need to be profitable, and investors would like to see returns, on investments made through profitability, cash flow, and with that cash flow, you can drive value in terms of exploration. So Camino is on that path. We are in the last month to close on a transaction with our partners Denham Capital, which is a $12 billion private equity group out of Houston, and with Nititsu Mining, a Japanese trading house and mining company that operate the Atacama Kozan mine in Chile, and they are building the Arqueros $400 million copper mine near the third project, which is our partner project, Puquios, in the region of La Serena. We just put out a pre-feasibility study yesterday on Friday of February 28th that summarizes a definitive feasibility study done in 2021. And that study shows a nice after-tax IRR of 23%. projects of this size, have nice economics that can be built in today's market. The capital for a project, for this project in particular, is $142 million. That's based off of a study done by Arsenco. So these are actionable projects that can be built in today's market. We're using a copper price of $4.25, which is the price today. And this is where we think that the copper market, the gaps are going to be filled for this demand surge. If you talk to groups like BHP, from start to finish, a greenfield project will take 17 years. All this demand that we're talking about on a major project like, let's say, a QB2, with Teck, a $9 billion project, you will miss the cycle trying to drill and build a project like that. So smaller projects with entrepreneurial management can fill in that gap. And this is what Camino is doing with our first project, which is Puquios. And again, we closed that transaction at the end of March to start production, or to start a build for copper production. And then we have projects in Peru that we're currently drilling that we think we can build on the back of our first operating mine, Puquios.
But it's an area which struggles, but which makes so much sense, right? And what you've done in Camino by bringing in a strategic partner in Nitetsu, by partnering with Denim, which had already assets and was looking for someone to develop them. I mean, that's a unique strategy, and one that, in my view, is one that is to follow. But the market cap isn't following you, and that's got to be frustrating. I mean, where do you think it's going to break? I mean, what side's going to break? I mean, on your side, you've got the partners. You've got Denim, you've got Nitetsu. I mean, those are very strong partners to be able to shoulder this whole thing. But, I mean, what are your thoughts on that and what that means for the junior space?
Yeah, so Camino is moving away from sort of a speculative stock and into a situation where it comes down to execution. In terms of mining is inherently risky. By buying a project that has its main environmental permit, its RCA, to start building and operating in Chile, that's a huge factor for me in terms of a timeline to get a project into production. The engineering is complete with definitive feasibility studies done. We've got an operating partner with Nitetsu Mining who have a lot of expertise in the jurisdiction. So we're checking all of those boxes, and you're de-risking the project to the point where now it's really an execution risk or requirement. Value follows that. We're buying the asset at a discount to today's market price, and so as we build the project and get on that Lassonde curve, part of the curve where you're building an asset, you create value. If you do that in the right market at the right time, and we think we're there with copper, you can create a lot of value. And we've seen this with all kinds of companies. I mean, a company that I followed simply because we're looking at similar geology in northern Chile is Antofagasta, the Machia project. I mean, Antofagasta found and purchased their first project in the 1990s, and they never looked back. They created a company, and when you say, the junior space, the gap between the seniors and the juniors is unknown. It's very well known. It's just, there just hasn't been anyone on that path in a very long time, other than, the Capstones and the Antofagastas. So we're entering that space, and it's primarily driven because we need to. The industry needs to start getting metal out of the ground. And this is where Camino has positioned itself with good partners to do that and to continue to build our business so that we move away from, a speculative story and into a business plan. And that's what we've done. Now, we're drilling in Peru now, so we still have that opportunity for big hits and major discoveries. And as we build out the resources in Peru, we think that will be the next mine that we build. Along this. So we have a pipeline so that we can build a company into the mid-tier space. So I think it's more opportunity now. I think we're one of the only companies in the sector that's moving along this path, and it's taken us a lot of time to find the right project. And there really is a lack of projects that are actionable, I would say, in this market, in the copper market.
For juniors to actually go to the next level of development and try to fill that void that I think exists between the small scale miners and the big guys, even the medium sized guys, right? I mean, there's a void there.
Well, someone has to do it first, and I think Camino is taking a leadership role in this. We recognize that the investment market has changed as people move more towards passive investing, and so with that, our business model has to change. When I say our business model, the whole sector business model has to change. We're moving towards producing assets. This is why we've spent several years identifying, and now we're 1 month away from acquiring our first asset, which is ready, construction ready. That will change our profile in terms of how we operate going forward. It makes a huge difference when you have cash flow in a company and then can use that cash flow, continue to build your business and do the exploration that's required in the industry. I mean, there's a whole other discussion point here is, copper needs to be found. Copper needs to be discovered in our industry. And how do you fund that? And it's through cash flow, and that's how you can continue to create value. And I think investors will, to your earlier point, Lucho, how do you reconcile valuations? Well, I think investors will follow companies that demonstrate their ability to execute, demonstrate their ability to create cash flow, and then use that cash flow to generate more value, and that value will likely come at the exploration and development side of the business. And so this is why you create a portfolio vehicle. This is what we have in Camino, where you can develop multiple assets and create value, and that's why we're here. To create value. In this particular case, it's in the copper sector because we think copper is poised for a rebound here.
And it'll be interesting to see how the market actually reacts. I'd be very interested to see how you find PDAC this year. A year ago, you were at PDAC already with Netetsu in supporting Camino on the exploration efforts at Los Chapitos in Peru. Now you're here with an idea that you were talking about last year, but really executing, right? I'm buying a project. It's ready to be built. And I really hope the investor gets it, because sometimes I feel that the investor either wants that blue sky dream that is completely speculative and depends very much on how fickle the market might be in terms of giving you the money to drill, or wants that exposure on the big side to the big cash flows and stuff like that. They don't want to go through the effort or the pain of looking at the development bit, even though your valuation is so low and the prize is so big, right? Hopefully time around, hopefully they get it.
I mean, look, like in the junior space, the M in mining stands for marketing, but you have to have something to market. You got to keep your powder dry. So we've been doing that. We've been head down, getting our deal over the line here, moving things along in Chile and Peru. And now we're ready to get out and market our business. And this is why, we've in the new year we've started this in earnest. This is the fun part of the business when you're actually executing on your business plan. And part of that business plan is finding investors, new investors, previous investors to get behind the company and create value. And this is a prime opportunity for that to happen.
No, I mean, I certainly look forward to catching up with you afterwards. It'll be great to see. I really like the model, and I hope the investment community sees it, and that brings others to the table to really follow that same model.
Well, and I mean, look, this is the first time on your podcast. Again, this is just exposure to some of your network, and we appreciate being here. And I would encourage people to take a look at Camino, the investment opportunity that is here. It's a long-term business that we're building, and if you look at our the past business that we've been involved with, we've created going concern businesses. But it starts here. I'm a large investor in the company as well. So at these values, you're investing alongside management.
I think it's a really important piece of the puzzle. I think the small to intermediate projects are going to, this is what I think. I love porphyries. I love them, like my dad was a porphyry expert. So I cannot not love them. Having said that, because of all these fundamental problems in the business model, I think it's the way to get the sector to be stronger. I think we need to attract, we were talking about before about the general picture, and I think we forgot to mention the investment. So I think we're talking some people between copper, lithium, and a few others, we're nearing the 1 trillion required to get the supply that we will be needing. So, it's a massive amount of money. And to get that amount of money, you need to attract a lot more generalist investors. And you're not going to be able to do that easily until you have more options that have a lower risk profile. A company without the plan of having cash flow, like the typical exploration junior, falls outside of most of the investment, the generalist investors' criteria and mandate, because it won't have ever cash flow, and they can't just do that. So I think having more of these cases, and I recently talked to a company called Pivotal Metals, and they have they are in Canada, but still it's a smaller scale deposit. It's a magmatic copper nickel, and it's smaller, it's easier to plan, the capex is going to be smaller. So I think having more of these smaller scale stories is going to be good for the industry long term. So I'm really excited to see more of those, and I'm really happy that we got to chat with you, Jay, and to cover a little bit about the Camino story with you. And yeah, I think it was a great conversation.
Jay, it's been great to see you. Good luck this week in Toronto. We will definitely catch up afterwards. Congratulations on what you're doing.
It's a pleasure to be here, and I'd love to give you an update and have a new conversation in another 6 months.
Sounds good.
Sooner, definitely.
All right. Well, thank you, everybody. Great to talk to you. And for the listeners, make sure you subscribe and do all the things that people ask you to do. And see you in a month.